Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. Thank you so much for joining me today. Getting some really nice feedback, both in emails as well as people commenting below here about some of the picks that we've been making. I'd really like to share in your success. So if you have some winning trades that you're getting off of the picks that we're making, absolutely leave a comment. I'd really love to celebrate it with you. It inspires me to keep working harder and harder to put some more ideas out there and really explain the ideas too. I think that's the big thing. Having the ideas and explaining how to use them, I think it's kind of like a different level where it makes it easier for you to actually put the trades on, especially when we set stop losses and targets and that kind of thing. It's up to you to manage the trade. You know, managing the trade is actually what we do kind of behind the curtain in the boot camp. If you're finding yourself struggling and unable to make money on what you believe are good ideas, you definitely need to take that investment and put it into the boot camp for only $295 to get to trade with me and my entire community for 30 days. It's just a smart investment. It's a smart trade, really. Also, by the way, if you're making money and you find the videos helpful, please click down and subscribe. That would mean the world to me, and you'll get updates and that kind of stuff. So today we're going to talk about the market, obviously, and thank gosh for stop losses. Yesterday afternoon, the market just collapsed. A little bit of profit taking, a little bit of stimulus talk, bipartisan garbage in Washington. And really the big thing is, if you listen to what we say every day, which is you absolutely need to know where you plan to get out of a trade, you would not have gotten shellacked yesterday afternoon where we talk about scale out and get out. Yesterday, you probably would have scaled out of some of it, and then as the selling accelerated in the afternoon, it became easier for you to manage the loss because now you had a lot less shares if you pulled the plug and got out as stocks started to change. And once you understand how to read the tape, it's easy to have significant reference points to say, if it gets there, that means something. If it gets there, that means something. We have the one line that we use every single day in every single stock, and specifically watching the SPY ETF, the NASDAQ, and that kind of thing. It's really a golden number. It's really just this level that it's magic, actually. I don't even know any other way to say it. It just works, and it works every day because it's the actual prices that are traded at. And once you understand how to use this number, trading just completely changes because now you have it's like, there it is. I know exactly what I'm doing, and that means it's doing what I want it to do versus nope, not yet. And you work the order a little bit more. And by the way, watch the order, the video on working the orders that I did this morning. It's a really good, I said day trading entry technique, but it works for everything. So we're going to get into the SPY. We have a list of stocks to trade. I think what's interesting right now, as we start to push to all-time highs, absolutely seeing sector rotation. We are seeing tech stocks making new lows, while stocks like Boeing, Caterpillar, Honeywell, DuPont, Dow making new highs. So we're seeing a rotation. If you got involved in some of the big metals and miners as they were gapping, we were saying it every day. There's nothing wrong with trading gaps. I like to wait a little bit for the stock to pause so I have a spot to manage risk. Nothing wrong with trading the gaps. But if you're going to, you have to imagine it's one giant green candle, and that means that has to be absorbed, and you're going to have to expect a little bit of a pullback, which is normal. And yesterday, silver and gold, they got hit. They got hit. So hopefully you had good trade management and you're still in a good spot. But today we're going to get into the SPY. We're going to look at if the market pulls back, what level we would expect it to pull back to. We're going to take a look at Disney, which actually gapped up after earnings, held that spot, and we have a pretty clear level there as well. Ironically, after the market getting shellacked yesterday, futures are up again, and it's a Fed stimulus juiced up market. Honestly, I don't know how else to say it. The stay-at-home stocks seem to be getting a little bit of profit taking now. Getting a lot of questions about trading Zoom, ZM. I am not trading it. I want to make that clear. A lot of people are emailing me and messaging me about that. Anytime a stock has news, almost what seems like once a month about hacks, and then the stock halts and gaps down, I'm staying away from anything. In my experience, in my history, why put yourself, and look, anybody can make an argument that could happen in any stock, but that's not what we're looking to do with what happens most of the time. And I'd rather trade stocks that don't have the fear of getting hacked and halted. Hacked and halted, I guess is the way to say it. There's plenty of other good opportunities. So we're going to actually take a look at those now. and see what we got on the plate today. So you can see that I actually drew a new trend line, which is this now 7-week rally in the SPY. So if we pull back, yesterday was pretty decent selling. If we go into the volume, you can see that we actually had a big spike in selling yesterday. You know, whether that was because of Biden or stimulus, it doesn't make a difference. It's coming from Washington. But ironically, the futures are actually up 20 points again, which, of course, right? Why not? The stimulus is holding everything up. The bid comes right back in. And I read an article this morning about Great Britain has seen the worst economic numbers on record. On record, the last quarter was the worst economic numbers on record ever, and stocks still went up. I don't know. Cisco actually in earnings after hours today. Lyft earnings after hours today. The reason I'm bringing these up is I don't normally trade these stocks. You can actually see Lyft is kind of sideways right now, but most of the stocks that are liquid and popular, and you might call them market stocks, Lyft not necessarily market stock, but popular, after earnings, especially the week after earnings, have led to some really good trading. So keep those stocks in your list. Groupon was actually called out by a member in the community last week, Stella. She called it out on the gap up. We said, not yet, let it pause. Now it's paused for a couple of days. I don't like the topping tails and the failed breakout, but I do want to keep the stock in the list for a potential run all the way back up to 34. We'll see. Once the stock has attention, things change, right? Casino stocks. Let's talk about Wynn. Let's talk about MGM. Let's talk about LVS. And not necessarily a casino stock, but let's talk about Penn. Penn now has an inside candlestick after trading very well and breaking out to all-time highs. We're going to start out with Wynn and the trading opportunity in Wynn. You can see this line. I actually drew this line back in May. Okay, as it got up there and paused, and then in the middle of May, it hit that level again. So you can see, you'll hear me say it over and over again. Failed. Oh, finally, bought this pullback, thought this was the greatest trade in the world, fully expecting another pump higher. Took a loss on it over the next couple of days. It didn't follow through. Failed again. This rally out of nowhere, it failed again, and now we're back up to that level again. So what's the trade here? So if we look at Wynn, we look at LVS, we look at all of these guys, we need to see proof. We need the market to give us feedback, get through this level, and actually stay there for more than one day. This is a big problem that traders have. They chase price, chase the most recent thing. And we're going to talk about the airline stocks and the cruise line stocks in a second as well. You need more proof than yesterday. If we want to piggyback on the smart money, we have to say, how long has the smart money been allocating capital to this idea, which will set my conviction level to be in that stock as a buyer in this case. And the more proof I have, meaning the more conviction, the more I can look at that stock and say, okay, if I'm analyzing the order flow, this stock has a lot of money put behind it. And until I see that change, I feel it's safer or okay for me to consider that as an idea to start building a position in that direction. 1 or 2 days is not a lot of proof. It's exciting. It's popped up. It has attention. We need to see more than 1 or 2 days. So I'm asking you to leave these stocks in your watch list. Don't chase this move where the stock basically goes 10%, 20% in, actually this is 20% over the last week in just 2 days. That's a big move to absorb. The stock needs to get through this level, stay there, and set it up. So let's have the casino stocks. Let's have the airline stocks, AAL. Same exact thing, right? And this is actually what I'm talking about. See, this is people chasing the price, finally got out of this range. You buy this higher opening without putting it in perspective, and you bought it the wrong time, and now you're sitting on a trade that traded against you the entire day yesterday. So that's a good example of why we're waiting for proof. We want the market to prove to us the smart money is still there and holding that trade up. And by the way, if you're not sure what smart money means, again, click down and join the boot camp. It's life-changing when you understand what we're talking about. So Delta Airlines, same thing. Let's go DAL. Same exact setup, right? Exactly what I'm talking about. Don't chase price. Let it prove to you it's going to stay there. And LUV, not necessarily a big deal. So airlines, and then we could talk about RCL. Same thing, right? Don't chase price. And CCL. Getting a lot of people asking me about this, and it's a longer-term play. And you also have to ask yourself, are these stocks in play now that you want to allocate, tie up your money, and look for the next move over the next day, the next week, the next month? Are those trades for the next month, or are those investments where you think that they're going to get back to pre-pandemic levels? That is not a trade that's going to happen anytime soon. There's still so much indecision. There's still so much doubt. A longer term play, 100% for when the world gets back to normal. That's tuck that away and look, that's not a trade to me. It's not a trade. But some other stocks that have been in play, we're going to look at OSTK, which again, hopefully you've been trading this with us for the last 6 months, actually, which is just really good trading. Pulled back yesterday, a little profit taking. Everybody's like, what's going on? What's going on? Well, profit taking, that's what's going on. We're going to open up a little bit lower again today. Retail is getting a little bit of a hit right now because getting out, right? Getting out. The one that's not, though, is Wayfair is actually still pretty strong. We're going to take a look at that. And quite frankly, this stock is strong too. One day pulling back, we're so myopic in the sense that we one day of pulling back and we're like, what's wrong? What's wrong? That's normal. Stocks are supposed to pull back and have profit taking once in a while. What's not normal is going up 12 months in a row without a pullback. That's not normal, or specifically from March low to now. I think we're up 60% or something like that. So OSTK, we're still looking at. Car is one that Nick calls out all the time. I like this breakout, but very similar to what we're talking about with the airlines, very similar to what we're talking about with the casino stocks. Show me you're going to stay there for more than a day. This really has been in the trading range. If you follow what I do, we're basically, the stock is stuck between 30 and let's just call it 26. Yesterday was the first day out of that. It failed as it came back with the rest of the market, but it still closed above the open. This is going to be an interesting one to watch. Would this be one of my top plays? No, absolutely not. But we're setting up trades that if the market gets above that level, these stocks get above the level, they finally get out of that box and prove to us that the smart money is coming back with more, then we can piggyback off of that. So let's keep these in our watch list. Some other stocks that are tradable right now. Mastercard, really nice breakout and pause. This is exactly what we're looking for. We're looking for it to prove itself, to stay there. Now it's 5 days after the breakout plus 4 more days. This is definitely one we're going to be looking for new move higher and essentially going to be looking at, let's say, $20 from here. That would be the target during this pause in the rally. $20 would be from there. Starbucks, one that I love to trade, have not traded it at all. You can see why. The stock has had mostly red candles. Earnings were not bad, actually. It actually spiked up on earnings, but now is just kind of drifting again. But again, if the smart money's gapping the stock and is staying outside of these levels, this stock can trend. This is one of those trades where you might move slower moving averages to hang on to the trade because it doesn't exactly have a lot of momentum, but it does pick a direction. This is one that I'm going to look to start building a position in. 2 other trades that I think are really interesting today, and they're kind of counterintuitive, not necessarily what you might call textbook trades. FSLY actually had earnings. Earnings were not good, got smashed. Now the stock is actually down at or near support. A little bit higher this morning. This is a trade that traps a lot of traders where it's like, oh, there's the head and shoulder top, which that's not, or there's big support. I'm going to short sell this thing and it's going to fall off a cliff and go all the way down here into the 40s. This is a bull market. Moves lower despite bad earnings, breaking obvious support levels, tend to barely take out that level and then rocket in the other direction and hammer everybody who's shorted the stock in a bullish tape. Short sales in bullish markets, regardless of the stock, typically are not the best trade. So what we're actually looking for here today is kind of a advanced, be on your game type of thing, where if the stock opens higher, trades a little lower, gets back below that support level and reverses, you could see a very fast spike up into this 94, 95 area. And Netflix actually setting up the same kind of thing. Again, I want to be clear, these are not textbook trades. What I'm telling you is the short sale is probably not going to follow through. Netflix is actually setting up as a saturation play at support. So a lower opening, which looks like it's actually going to open higher. But if we open higher and push lower, I'm going to be looking to bid this support. Again, not a textbook trade. It's one of those trades where you're reading the price action. You start to get a feel for where somebody would make the wrong trade, which again is a short sale through support in a bullish tape. They generally don't follow through. So this would be an interesting play to keep an eye on today. So we set this, the futures are up again today. It's going to be interesting to see if we stay there. Again, get your economic model out of your head about what you think is going on. I know plenty of people that are out of work, living on half of what they normally do. 2 incomes combined aren't even close to what they had. Businesses are closing down all over the place around here. People are dying for that stimulus check, $600. there's a big difference between what the stock market's doing and what the economy is doing and what's the reality of out there right now. But as traders, with that stimulus package below there and possibly another one, possibly a vaccine coming out, the conversation in Russia, there's a lot going on. So you have to be on your game right now. Thankfully, it's opportunity. Very grateful to have all this opportunity, but you really need to be on top of your game. And that really means work your orders, stick to your stop losses, and understand how to hold the winners. We got some stuff going on here. So if you have any questions, definitely leave feedback below. And if you have some winners, let me know about that too. I'd really like to celebrate that with you. Keep an eye on the airlines, the casinos, and the cruise lines. Very interesting if they perk up and stay there. Penn is going to be an interesting one too. Definitely have Penn in your list today, because when that stock trends, for $40 stock, you can get 10% moves in that stock pretty easily. So keep an eye on that. If it breaks out and moves in the direction of all-time highs again, that'd be one that you can hang on to the close. So let's have a great day, everybody. I'll speak to you soon.